Greetings again, amazing traders, and welcome back. If you are new here, thank you for joining, and if you are an old subscriber, thank you for sticking around. Today I'm going to jump straight into the video so that we don't waste so much time. If you have been following along already, you will agree with me that we have been using the Asian range and the Fibonacci extension tool to take trades in Forex. So we are going to be doing a market review for Wednesday, or Tuesday and Monday. At the time of recording, it is Thursday, the 27th of February 2025. So we are almost at the end of the month. So let us look at what happened on Monday and then Tuesday and Wednesday. Just to mention again, always make sure that your session breaks is toggled on, and by so how to do it, you have to press right down to the time frame at the bottom of your screen, and you are going to see all of these options here. Make sure you toggle on the session breaks so that you can have daily dividers on your screen. Mine is not very visible, but trust me, it is there already. So we have Monday, we have Tuesday, and we have Wednesday. This is Monday, Tuesday, and then Wednesday. We are going to look at the opportunities that we could have in the market using the Asian range. If you have been following along already, you will just know what I'm going to do right away. So I am simply going to mark the Asian range, which starts from 8 p.m. to midnight, like we have been doing already. You know what to do, please. If you have been following along, you simply have to put your vertical line at 8 p.m. to midnight New York time. This is it here, and then you are going to mark the high and the low that was formed during that session to have your Asian range, like so. The high and the low that was formed from 8 p.m. to midnight New York time, and this is going to give you the Asian range. And when you have this already, you are going to pay attention to the if that true day open, which is the midnight opening price, like so, and you are going to extend that across, and you will study how price is going to treat that level. Like I've been saying already, you can extend it right to 3 p.m. okay, because at 3 p.m. most of the big banks, they will be pulling out their orders in the market. So you want to see exactly what is going to happen. But if you study Monday, you will realize that Monday was actually a sell day, so we didn't actually have a very good trade opportunity using this method. So assuming that you did not take a trade on Monday, that is going to be totally fine. You could wait for the next day. Let's see if we could have an opportunity in the market. I think it was a very difficult day following the strategy that we've been trying to implement, because what we simply want to see is we want to see a run on the Asian highs buy side liquidity if we are bearish, and then we are going to wait for a market structure shift, and then we are going to take our trade. But if you notice that when the market opens at midnight opening price, we did not even trade above this midnight opening price. Price constantly stays below the true day open, which is midnight, and then it sank lower. Okay, this occurs when we are in a sell program, or when the algorithm is in a sell program, let me put it that way. Okay, so in cases like this, it becomes very difficult for you to take a trade. Otherwise, you can still take a trade if you know exactly what you are doing in the market. So let's say there was no trade on Monday using this strategy, so we have to go to Tuesday. Now on Tuesday again, we are going to pay attention to 8 p.m. and we are going to put our vertical line at 8 p.m. right up to midnight, which is 00 hours New York time. We are going to put our vertical line again, and we are going to mark the high and the low that was formed during this session, and that is going to give us what our Asian range, like so, right? I hope you have been following along. This strategy is not very difficult. If you have been following along, please, if you have been using this strategy to place a trade, I will plead with you that you should just leave a review in the comment section. Let me know if this strategy has been helping you. So you are going to pay attention to the if that truly open, which is midnight opening price. And now, what is the condition? We've said if you are bearish, you want to see the market trade above the Asian high, okay, and then it has to grab all the liquidity, buy side liquidity resting above what the Asian session. and then you wait for a market structure shift and you are going to take a trade. Now this is what we have here. I just simply went to the lower time frame, which is 5 minutes, so that we can see a better opportunity. Now look at what happened here. If you pay attention, liquidity was taken right over here. Okay, buy side liquidity was purged right over here. You see, with these small highs here, it is very significant in smart money concept. So this could be a trade actually for the morning session. And then you see what happens here, an aggressive displacement, right? And then this is a market structure shift or a change of character. When this swing low gets taken away, this becomes a market structure shift, and then the market created an imbalance, displaced lower, came back, but we were not able to come back into this fair value gap. What happened? The market simply just stayed below the April through day open, like so. And what have I been preaching here? I've been saying that you can still take your sell trade even below the midnight opening price. Okay, you can take your sell below or at. You can also take your trade above or at, like so. So this would have been a very good trade if you did take this one. Or let me change this color so that we can have something that makes sense. And this one should be so. Okay, so this could be a very good trade for the morning session. And how many pips was that in total? 26 pips. I mean, it makes a lot of sense, right? It makes a lot of sense. So if you wanted to do like what we've been doing already, using the Fibonacci tool, like you want to know how many standard deviations should go lower, you will have done something like this. I hope you should be familiar with this already. Let me do one standard deviation, which is -1, -0.5, and I'm simply going to double off this one like so. Now let's see how far the market went down, and let me do -0.5 so that we can see the possibility that we could have taken a trade also. -0.5, that would have also been a low hanging fruit. Now study how price reacted here and then from there, which is 1.26066. okay, now this is just to prove to you again and again that the market is algorithmically delivered. Okay, there's an artificial intelligence that is in charge of delivering price. There's no buy and sell pressure. If that is not true, then why is price so accurate? Look at how price reached out to this level and then turned immediately, which is negative a standard deviation of the Asian range. We see that 1.26066, and then we saw a reversal from there. Now if you did not take a sell here, now you could still have taken a buy, right? Let's say you were waiting for price to take out the Asian lows, sell side liquidity. This could still be a very good opportunity, right? This is the Asian lows right here. You see that the moment price traded below there, it took all the sell side liquidity resting below here, right? You see that all of this sell side liquidity resting below the Asian range, clearing all of these lows here, right? Now what happened? We saw a market structure shift occurred when this swing high was taken, and then price traded back into this bullish order block, this down close candle here. The moment price traded into this down close candle, you could look for your buy opportunities. Okay, you could look for a buy opportunity here, and then what will you target? Let's say you took a trade right down here, and then your stop loss is simply below there. What is our profit objective again? One standard deviation above the Asian high, right? We have been preaching this already. So if you did a standard deviation like so, let me do this like so, right over here. And just to mention again, a standard deviation is simply projecting the Asian range by 1. Okay, you do a duplicate of the Asian range, and then that is your profit objective. Now study how price hit one standard deviation beautifully here and then reacted. You see that this is one standard deviation over here. It hit it beautifully, and then you saw that reaction where it pulled back a little from here. You see that? So this is not random. Okay, and what is one standard deviation here? 1.265 or 92. That would have been a very good trade, and then you'll be out of the market, just out of the market completely. You don't need to do a lot, and that is 44 pips already. So that was a very good trade for Tuesday. In case you saw that opportunity, a huge shout out to you. And now let us look at what happened on Wednesday, which was yesterday. Now we are going to do the same thing basically, or pay attention to the 8 p.m. open and then the midnight open, and then we are going to mark the range and see how price reacted to that level or after that level. Now this is our range here. Sometimes it's difficult to get it accurately, so you have to see through that. Now we are going to pay attention to the high of the range and the low of that range. And just to mention again, I think I owe you a video. I want to do a video on flout, the Asian, the central bank stealers range, and then the Asian range. Just like I mentioned, you don't have to use the Asian range all the times. It depends on the number of pips that were formed. Okay, sometimes if the Asian range is overly extended, you don't have to use it. You have to either use flout or you use the central bank stealers range, which I am going to do a video on that, I promise. Now let us see how many pips were formed on Wednesday during the Asian range. 39 pips. Okay, but it should not be above 50. But usually when it is more than 30 to 40, it becomes very difficult to have standard deviations. So Wednesday actually will have been a very difficult day to trade using this strategy, to be honest with you. Okay, to be honest with you. But let us say you had to use other strategies or using other PD arrays, key PD arrays. Now you will have used this fair value gap here. I mean, I don't want to use that Asian range because you have over about 40 pips already in extension during the range. So let us say you use another PD array, which is the fair value gap, like so. You could still place a trade using the fair value gap. Okay, see how price stayed here inside this fair value gap, right? And I said already that the sensitive area of a fair value gap is its midpoint, which is called the consequent encroachment, the CE. That is the abbreviation for consequent encroachment. You study how price stayed here, and then if you notice the midpoint of this fair value gap, it's a 5-minute fair value gap actually, which is the low of this candle and the high of this candle. Now look at the middle point, the consequent encroachment. See how price stayed here. You see that? So that is just to show you how sensitive the consequent encroachment of a fair value gap can be. And these things are not random, okay? They are algorithmic. So if you use that to place a trade, I mean, you could have had a very good trade right here for Wednesday. But trust me, we do not actually have the Asian range. I mean, I don't like that. Okay, so this could be a trade. Okay, this could be a trade, and assuming that you targeted just the Asian high or all of this buy side liquidity resting above here, I mean, you could have a very good trade on Wednesday as well. So in the nutshell, I think Tuesday gave us a perfect trade entry. Monday did not actually give us a perfect trade entry. So if you traded this week, I think Tuesday will have been a very good trading day using the Asian range. I hope that you found value in this. I think on Friday, Lord willing, I am going to do a video on the market review for Thursday and Friday, and this is going to be the last for market reviews, and we are going to start focusing on other important things. I think I'll do a video on the Asian range, the central bank stealers range, and flout, and then we are going to start looking at fair value gaps and how to use fair value gaps, order blocks, bearish order blocks, bullish mitigation blocks, breaker blocks, and the rest. We are going to start learning how to use those institutional reference points to take trades in the market. So hopefully you stick around, or always make sure that you like the video, and if possible you share so that we can grow this community. Thank you so much. To those of you who subscribe, again, I am super grateful. Thank you for joining the community, and trade safe and stay blessed. Goodbye.